I thought there'd be one more push up, but I've been talking about a continuation move to the downside in the dollar that this wedge would break. I gave you the line in the sand, 95.5, which held last Thursday before the BOJ. I thought that we might push up one more time and test 1,000, but that's why you need a demarcation line. Definitely once we took out 98.5, the acceleration to the downside finally occurred. So for the last few weeks, I'm saying we could have at least equal to this from here, or a fib extension of this from here. And if I really want to get bearish, you could call this about 350 pips from this breakdown would take us down to 95.5, 95. So the stop hunt in the euro, I was right about being long cable. I was right about being short the yen crosses, not right about being just outright short yen, which was a collapse and took out Kuroda's gains on a surprise move of negative interest rates for the BOJ. Also, we're getting a big rally in the crude today. So we're now approaching that 138 number. I thought that we could move up towards 144, 142 in USD CAD. I still think that's a possibility, even though the dollar looks very vulnerable here. So if the crude cannot get back up through this 32.5 level, there is potential for one more decline. I can't rule out that we're on our way to 140. But I would not short the Canada here at 138. That's a very significant number, and it's been 1,000 pip decline, so expecting some type of reflex rally there. I talked about staying long the commodity currencies, particularly the Aussie, the Kiwi, as gold is blowing off with dollar weakness up towards 1140. I think we're getting near the end of that move. But the dollar definitely, if you just draw a trend line off these lows, we have a breakdown at 98.5. So I think that this, if you're a bull, you're just looking at this as being an A, a B, and a C. If you're a bear, you're looking at this being 1, A, B, C, D, E for 2 with a 3 to the downside. The most bearish count you could come up with is about 480, 500 points from here, which would take it down to 95. That would be 1.618 of this. So 113, 114 euro looks feasible now. A lot of Ellioticians saying that that's just going to be a wave 4, and then we'll resume our move back to the downside under parity. So if you miss this dollar weakness move in the coming weeks, there should be a pretty good buying opportunity intermediate term in the dollar, but it'd be premature to try and buy the dollar right now. Give me a Y if you're with me on the analysis of the dollar index. Also keep in mind we have the NFP on Friday. So perhaps if we get a decent jobs number, it's going to provide a bounce in the dollar to sell into. So we could use this 98.50 pivot. Again, that all rally should be repelled up towards 98.50 for this breakdown to continue to be viable. But you can't ignore the fact we have a breakdown of this grinding wedge-like move to the upside, and now we're going to have something like this. Just something to keep in mind. And we were there for this. This was a Draghi meeting where he disappointed and had to come back and talk the markets back down. That the majority of the break happened really in one day. So we haven't had the same magnitude, but we've got a pretty good drop from Friday's highs. So don't get carried away with the short side of the dollar. At this point, you're going to have to wait for retraces and for the market to reset. The crosses that worked said be alert for reversals in the yen crosses. The guppy worked from the 175 number I talked about. Euro yen worked a bit, but I think there's going to be other opportunities in euro yen, maybe even a retest of the recent highs. So give me a Y if you're with me on my view of the US dollar, which today has been a very significant day to shift the trend from neutral to negative, at least for now, looking for some more downside. With this being an A is my preferred count, this being a B and a C wave down here towards 95.5, 96 in the coming days and weeks. Give me a Y if you're with me. So the gold was heading up prior to the dollar weakening, so it really just added jet fuel to it. It's a blow-off move. in my mind, I still think that there's a chance for the gold to end up failing on this wave. We're now trading up around the 1140 level. Aussie definitely dragging, but this was one of the reasons why I said it wasn't prudent to try and short the Aussie. Aussie definitely getting support from a weak dollar today. And I was wondering when I was talking to everyone, looking at a major position trade setting up in Euro Aussie, what was going to be the catalyst to take the Euro Aussie up into the sell zone? And now we're getting it. So it's dollar weakness. I believe this is going to set up a nice short in Euro Aussie in the days and weeks ahead. So here's the gold, no sign of a top yet. It looks like a blow off, but I wouldn't be chasing gold. I liked it down here. I wouldn't be chasing the market here. I was talking 1120-ish, 1140. We're here. Not saying that we can't get a continuation move, but I'd be careful about initiating new long positions in the gold. So we got a pop in the crude oil market as well. And my forecast from early in the week and last week was that the crude initial $7 rally that we could pull back 61.8. That's exactly what happened here before today's rally. Here's the rally in the crude. Okay. That's because of a rollover. Let's just go daily. The March contract. So as you can see, we did get the hold here. Talked about pulling back towards this $30 level. It's held. So the potential for crude to rally another $7 from here would take it up towards this 38 level, 37, 38 level, which you would think will put pressure on USD CAD, but I cannot recommend shorts at 138. We got some off at 42, covered a little bit under 140, so middle ground Canada here. We'll see. This is a very important level for the crude oil to hold. If we don't and we take up this low, new lows to follow, 26, 25 coming. I think that's what it's going to take for Canada to bounce back towards 142, 144 for a continuation move on that correlation. Give me a Y if you're with me. And then here we have the treasuries spiking to new highs, which is why the yen fell apart. Big risk off move, people moving into long-term treasuries, but fading a bit. This could be drive one, drive two. We could pull back, so I wouldn't chase the short side of the yen either. I do believe that we'll get at least one more bounce in the yen to get short. Again, the RSI on US dollar yen outright had a confirmed high, so just goes to prove that any method you use does not work 100% of the time, but you're always better off sticking with the work than deviating from it. You're going to miss things sometimes, but maintaining discipline is important. Better to miss things than to lose your discipline, in my extremely accurate and humble opinion. So give me a Y if you see the bonds going up. It's been part of the pressure of the yen, US dollar yen, giving back the Kuroda gains. And also the S&Ps are at a very critical juncture here. So far holding this pullback. Still lower on the day, 11 lower on the day. So I can't rule out another push down in S&Ps to get a new low. Possible that we have some type of divergence down here. The other count is this was A, this was B, and the Elliott waivers are going to get their chance to short S&Ps up around 1980 or so. Markets are becoming much more volatile. Any questions on the correlation trades between Canada and oil, Aussie and the gold, US dollar yen and treasuries, or S&Ps? Also the crude with the Canada. Any questions? Okay, let's move on to our individual instruments then. Starting off with Euro USD, it's where we always start. So on this one, I guessed wrong. I thought after Friday's break that we would take out the stops underneath the market. That's not what happened. So the stop hunt is happening on the upside. I said you had to get out of the way if you tried to short back over 109.60 over these highs right here. So once we cleared 109.60, the acceleration to the upside happened. I've been talking about the potential of an intersection of lines back here. Was just looking for one more jiggle down here. It didn't happen. So I don't think you could fight the euro yet. I think that 113, 114 is still a possibility while the dollar index heads towards my levels. So what do? Old support, all resistance becomes new support. So you're going to be looking for pullbacks, maybe after a little higher high, back down towards this 109.80 level, 109.60 level to catch the next wave up towards 112, 113. Here's your weekly chart again. Very negative close. Last week, well off the week's high, and here we are squeezing shorts. I said the grand prize was going to be 110.80, 110.60. So we've already cleaned out the buy stops here, so I'd be looking for a continuation move back towards this 112, 113 level. And you want to look for some type of pullback in here. Old support, old resistance is going to be new support. So ballpark, even if we head higher from here, you want to buy pullbacks back down towards 110 to 109.60, looking for 112, 113. Give me a Y if you're with me. So the pound, I was right about. I said that we were going to have some type of fib retracement. So the euro pound kept me more constructive on the pound than on the euro. So the pound is almost at the 50% level here. I drew these fibs in here a week or so ago to just exemplify how oversold we were and how we could have a bear market rally back to the 50% retrace, maybe even back towards 61.8. I don't think it's going to have that much juice in it, but possible that would be right back to the support level, a low of 148. So pound way overdue for some type of pullback, accelerating through this rising wedge. I'm not ready to call out an all-out short here in the pound, especially with the way the dollar index is behaving. So I'd be looking at pullbacks back towards 145, 145.30, and perhaps we need to complete up towards this 146, 147 level. Longer term, I still think the pound's going to make new lows and take out the 41 level. So if we head up towards 46, that would take us down to 135 longer term, which is what I'm still looking for. This looks like a second drive, nice divergence. But still think there's a possibility that this is going to be a good rally to sell. Still looks like what we have is a bear market rally. I'm not going to call this a major bottom. If you see on the daily, we have a confirmed low. Normally major lows come in after diverging for a while, not confirming. So to me, this is a selling opportunity that's going to be setting up in euro intermediate term around 113-ish, and the pound between 146, 147. Give me a Y if you're with me. This was something that we called all the way from the bottom here with this divergence. And then we had this ascending triangle that was negated. And Monday I said I still think we could head up towards 45. Here we are. So what had me thinking there'd be one more jiggle to the downside in euro was the euro pound, and up until today, we were heading down from shorts that I talked about last week above 76.60. I'm still not convinced this is the bottom in euro pound. It's a decent little reversal. I still think that there's a chance that we head back down towards 74.24. To me, it looks like we're setting up some type of descending triangle. So interesting that we held these previous lows. So here's your triangle line, support right here. Perhaps we get rallies again with the euro rallying back up towards 76.60. So this was a good call from here. You may want to flatten out and look for another short back up around 76.60, because now we have a descending triangle developing. And if you measure the move from here, high 77.55, low 5 1/4. So that's 130 pips. Once we take out this, we're going to head back down towards 74. Here's the 50-day average. So I would view rallies in euro pound as shorting opportunities, or a breakdown under today's low should take us back down towards a major weekly breakout of 74. Give me a Y if you're with me on euro pound. So it was a good trade. It was was there for about 150 pips from last week's Fed meeting. It was up here grinding 660. So even now, if you're still long, even after this pip, you still have 80 pips. I recommend everyone goes to the door before the NFP. So here's the big surprise, at least the acceleration both ways. The upside to 121 did not surprise me. It tagged the line. What kept me away from outright shorts in US dollar yen was my work saying we had a confirmed high. So it's pretty unusual top, just a rollover, distribution, then acceleration. So if you are bearish the yen, and I think there is potential now after looking at the kind of week we're having here in the yen after Kuroda, that we're headed back down under these lows. Kind of a descending triangle again here. I think we're going to 109. So what we want to do is we want to look to short rallies, look for selling opportunities now. It's kind of a neutral position here going into the NFP, but I would say any rallies back towards this support level, 120, would be a shorting opportunity. No reason to buy it here. We're not diverging at all. So I do think, though, that we'll at least hold it one more time before we crack the 116 neckline. So here's another classic head and shoulders descending triangle. I actually thought we could make a move up towards 22, 23. I have the apex of the triangle at 22.67. So the yen now is the stand aside for me. I'm not going to buy it. We caught this move up to 21 on the third drive, and I was looking for one more push up to the return line up around 22 that never manifested. But we did get at least a little bit of a secondary gift, because I said be alert for reversals and the crosses. I said look at shorts at 75. Here we were Monday in the guppy. We rallied to 75, so not a bad trade. I'd consider taking in the guppy here at 75 and looking for rallies. So this was a good call. The Aussie yen I talked about shorting, look for reversals. We broke down out of support under 85.29. I'd also be looking to cover shorts in the Aussie yen, looking for rallies to get short. And the one that did not pay the best was euro yen. Again, because of euro strength, and I still think that there's going to be opportunities to get short euro yen at better levels. I actually thought because we did confirm this high, never diverge by taking it out, that we'd have one more run in euro yen, and it still is possible. We're approaching major support, so called this rally up to 130. This was again shocker. Said look for reversals, but if someone put a gun to my head, I'd much rather be a buyer at 130, looking for at least a retracement back towards 131.5. And I'm not even going to rule out that this is just ABC and we get one more run in euro yen. But Euro Yen looks negative to me. I'm actually looking for new lows down towards 125 in Euro Yen down the road. So we want to look to sell rallies. Counter trend 130 should hold for a bounce. Give me a Y if you're with me. So those are the end crosses that I cover. So I want to take a look at Canada now because we have gotten down to the 138 level. I talked about that we could have one more push down with crude. I don't want to short the short Canada here at 138. Although longer term I was talking about 130. I'd now be looking for some type of recovery to develop in Canada down here around 38. My preferred location is up between 42 and 44 for a retrace. Just get rid of these fibs. So we are diverging here on a short-term basis on the 4-hour. As you can see, we're making consecutive new lows. RSI is still diverging on the 4-hour, not on the 1. So that tells me it's a low premature. But I'd be looking for counter trend moves in Canada. This was our high. I'm not sure this is the low, but we'll eyeball it. I'll call it around 38. So I think the better short coming up in Canada is going to be up here around this 50% to 61.8%. So I'm leaning towards looking for a reason to buy Canada for some type of bounce or retrace. It's all going to depend on if we get that C wave in crude to 41. Pressure will remain on it, but if we take out today's low in crude, Canada should be able to recover back to 142, 144, but that's going to take new lows in crude for that to manifest. I'm talking about $26 crude, but late in my view to be pressing the short side of Canada here. Looks to be setting up some type of falling wedge. And unless you believe the low is in the crude oil market, then you don't want to be shorting USD CAD right here. Mine comes in at 137.80. It's about another 40, 50 pips from here. Give me a Y if you're with me. Also, the counter of that trade was alongside of Aussie. There were nice breaks to buy it. Here we are pressing the high of the move. I've been looking for 72, so there could be another 70, 80 pips to the upside. And that's about all I'd be looking for. I said do not short crude because gold looks to be in a blow-off phase. Give you a nice buying opportunity, ABC. And if we just take round numbers, call this 70, call it 71.20. It's going to give you 72, 72.30 for an upside target. At that point, I'd be looking for shorts in the Aussie. Give me a Y if you're with me. So I'd like to cover Euro Aussie. So last week I said look to sell rallies at 56, 57. We went right beneath the 50% retracement. So if you got it, congratulations to you. I was showing this daily right here, believing that we could have something like this or something like this from here. Still a possibility we give 7.5 a shot, but this is a pretty good fade from these levels. Back under this 152 level, I think we're talking about 144. So still looking at accumulating shorts in Euro Aussie. If you didn't catch the highs today, if you did, I'd be booking it in case there's some more dollar weakness and Euro outperforms and we get some type of rally back for equivalence back around the 157 level or this parabolic 7.5. So that may have been it, but I'm still going to be patient and consider any rally back up towards 57.5. to be a shorting opportunity, closes back under 3.5, projects us way down. So Euro Aussie setting up, in my view, holding the channel, setting up a shorting opportunity. Perhaps we still get the 61.8% retrace, which takes it to the 157 level. That's where I'm a seller with stops over 160. Looking for eventually these lows, because we could have something like this from here. So some more dollar weakness and euro outperformance is what's going to take us there. So be patient and write down 157, 157.60 for a potential sell zone. And Euro Aussie. Give me a Y if you're with me. So Euro CAD, again, not much of a rally, probably because of euro weakness. I said sell rallies in Euro CAD. We had a decent spike here. Think that there could still be some more left in Euro CAD. I'd be looking for some type of fib retrace. So with the euro crosses right now, be patient about being a seller until we get up towards that 112, 113 level in euro. Give me a Y if you get it. Until that time, be patient. Know that this dollar index chart that still points to lower levels are going to generate some more strength in the euro crosses, and not looking for new highs in the euro crosses, but at least reflex rallies. Just some ideas to consider. And remember, I do recommend being flat into the NFP Friday morning. Just potentially some type of fib retracement that could take the Euro CAD back up towards this 157 level. Interesting that both Euro Aussie and Euro CAD have the same numbers, 157. So I'd be looking at 760 for a short there, and 760 for a short in both of those. So both crosses are going to be setting up shorting opportunities on strength higher from here. I would just say that the major point is that we have to be cognizant that we finally got that breakdown in the Dixie. It was a key area. I was talking about at 98.5. It's now our demarcation line for the continuation of the downside in the dollar. We should not close back above 98.50. We're going to be looking even from lower levels for rallies to sell into. Thinking 96 to 95 are probable targets in the days and weeks ahead. Any questions on anything I've covered here today? On anything that I haven't covered? So 98.50, I've been talking about it for a few weeks. Thursday looked like it might happen. Then the Bank of Japan ambush dollar bears, only for it to happen after most of the dollar bears were probably taken out. This has negative implications for the yen in a descending triangle. Looks like that 121 level was probably it. And we'll see where some of these pairs are when the dollar index is trading down here. You could almost draw a little parallel line here. 95.5 looks viable to me. Sell rallies, sell dollar rallies now until we get down into this range. And it could happen as early as next week. So look how quickly this move was compressed in time. Most of it was done in a day with some more grinding action to the downside. To me, it looks like we're going to have the grinding action begin from at least the 96.5 to 95.5 range before the dollar begins to regain its footing. So good hunting into the NFP. Remember that the market will be here after the NFP. I'd say with recent market action, this becomes an even more critical NFP release. Not sure if a weak number is going to be viewed as positive for equities, meaning that it puts the Fed on hold, or that the market is looking for a good number so that it affirms that the Fed was right to begin to tighten. I'm still not in the camp that the Fed is one and done and reversing the QE. So big number on Friday. Good hunting, everybody. And I'll see you on Monday. Thank you, RoboForex.com.